Alright guys, welcome back to NSTA, and today in this video we are going to discuss the impulse. Last time we have discussed the flat corrective structure and we also got your answers, the questions which I asked in the video. Definitely all the answers which I write below were correct. So kudos to those who attempted the answers. I really appreciate that. So today, instead of discussing the corrective structure, we should be discussing the impulses first. And why? Because that's how the markets start. We have the impulse, and after all the impulses, the market goes in consolidation. Once that consolidation phase is over, you are going for the next impulse. Now this impulse will dictate whether this combined is a corrective structure or it's a next impulse for the next correction for the upside. So there are many things comes into the consideration, and that is why people sometimes call it a little extra tough other than any analysis in the market. So what is an impulse and how this is different from the corrective structure? It's very simple. You can see it. The market is moving in two very form. The first one is impulse, then the corrective structure, then the impulse, then the corrective structure, then the impulse. It always does this, and it always do it on any time frame, any script, any technical chart. Even it does it on any line chart. It could be of the securities, it could be any country's economic GDP or something like that, but you'll always find some consolidation after an impulses. So impulses are very easy to see for a basic perspective. Let's see how do you recognize it. Something which moves in the direction sharply, you would call that as an impulse. That's the basic information for an impulse. Now it could be in any direction, it doesn't matter. Definitely it can go in down direction. If it's from this point to this point, if it's moving, see this is below, you have the time axis. So from this point to this point, if market takes little time, chances are very high that you are looking something which you should call as an impulse. Now after that, market goes in consolidation phase, right? Now you can see that from this point to this point, the market price has not moved much, but from this point to this point, you compare these two things, the width of this and this, see the corrective structure has the wider area on the time axis below. So that's how you actually can recognize the corrective structures from the impulses. You can see that. So this wide and this wide. Looking at this easily, I would declare this as an impulse, declare this as a corrective structure. As simple as that. So what do we do in Elliott wave? So in Elliott wave, the Elliott described impulse wave in the direction of the trend. Also, he described all the impulses has the 5 sub waves into it, which can be labeled as 1, 2, 3, 4, and the 5th. So when you look at the impulse this way, he also gave you some conditions for recognizing the impulses and validating the impulses. One way of doing this today, I already told you, you look at the time axis and you compare this with the corrective structure time axis. You will get to know whether you're looking at the impulse or not. That's a very basic concept of recognizing the impulse. Other way of looking at it, the Elliott way, go on the sub waves of it and read the impulse that should also have the 5 sub waves. So this will have one wave, the impulse wave, then the second wave, and the third wave, and the fourth and the fifth. Now he also gave some conditions in it. The conditions are the second wave cannot violate the first wave low point. That's the condition there. The third wave should be the longest wave among these first and the fifth and the third. So this wave should be the longest one. Let's check it out. So let's check from the first, it's longest, from the fifth, definitely it's longest. So that condition is also fulfilled. He also said that if you have the complex corrective structure, chances are you would be having a simple corrective structure here. If you had the simple corrective structure here, you would be having the complex corrective structure there. So that's the condition the Elliott described. This thing can also be looked at in the downward direction. I wouldn't do that. here for the sake of the length of the video, but you get the point, right? So keeping that picture in mind, let's look at the Nifty at the DRS chart. What is the impulses and what is the corrective structure? So let's see. Let's take this starting point and let's see from this time onwards what do we have in the market. So let's see, we have from here to here we have this much of the price movement, and then from this phase to this phase we have the corrective structure. Now let's check it from here to here, how much time we spent here. We spent, I think, 552 days, and from here to here we spent around, in that consolidation phase we spent around, you can see that 738 days, and then we break for the next high in the market. So you can see that the corrective structure has the bigger consolidation here, which means this will be the corrective structure here. Also you can see the flatness of this corrective structure. You see this is impulse sharp and this is going nowhere. That is also easy way to recognize it, right? So that's an impulse, that's the corrective structure. Apart from that, if you go more in the future, that's the impulse, that's the corrective structure. If you zoom in for the downtrends, let's see this as a downtrend corrective structure, और उसमें जो lower waves होती हैं उनको recognize करते हैं what is an impulse and what is the corrective structure. So if we look at here, from this point to this point we have the impulse, then we have the pullback or corrective structure, next impulse down, next pullback or corrective structure, and then we have the next impulses. All right, I'm not taking the sub waves just because it's a basic concept. I don't want to confuse the beginners, but yeah, anything which is moving sharply in the direction of the trend, you are looking at something which we call impulse in the market. So that's the impulse from our side, guys. I hope that shed some light over the impulse concept. If you were unable to read the impulse, I guess by this time you should be able to read the impulses in the market. So with that said done, guys, I'll see you with another quick educational video next time. Until then, trading week is going on. Trade with care, and I'll see you next time. Bye bye.